Hello, good evening and welcome to Business Live. Coming up, Institute of Statistical, Social and Economic Research, ISE, projects Ghana's growth rate to hit 4.5% for 2024.
Quarter 2 2024 figures. So it tells us that if we look at the past where we tend to grow even faster in quarter 3, quarter 4, then we are likely to grow by 4% or even more.
In this bulletin, Minister of Finance Dr. Mohammed Amin Adam urges businesses not to panic, insisting the Bank of Ghana has a strong reserve position to support the CD.
The worry by many people is that demand for Forex will increase as we go closer to Christmas. And I can tell you that the Bank of Ghana has accumulated significant reserves to meet the demand.
Plus, International Monetary Fund Managing Director Kristalina Georgieva pledges the fund's support to aid Ghana's economic recovery, but raises concerns about threats of election spending overruns. We have details of this and more lined up for you. Please stay. Pleasure you could stay on. I am Pius Kojobaka, and look now at our stories. The Institute of Statistical, Social and Economic Research, ISE, has projected Ghana's growth rate to hit 4.5% this year. The IMF earlier revised Ghana's growth rate from 3% to 4% for the same period. Professor Peter Quartey said the country is on a positive trajectory and expects the rate to exceed 4%. He was speaking at the launch of the State of the Ghanaian Economy Report and review of the third quarter economic performance. Here's more.
At the launch of the State of the Ghanaian Economy Report and review of the third quarter economic performance, Professor Quartey said there is the need to ensure expenditure rationalization, especially in procurement and compensation through digitalization of payroll system. Based on the latest projection, it says upbeat about Ghana's economy, but wants government to enhance revenue mobilization through digitalization.
I think this is the 33rd edition of our report, and people find it useful in terms of the data, in terms of the credible, non-partisan analysis of issues concerning our economy. We've so far seen that our growth rate seems to be slightly higher and even higher than the pre-COVID growth rates. So if you look at the quarter 2 2024 figures, so it tells us that if we look at the past where we tend to grow even faster in quarter 3, quarter 4, then we are likely to grow by 4% or even more in 2024. All things being equal. We also saw that so far there's been fiscal consolidation. Government, based on the IMF program, is very much on target in our fiscal. Nevertheless, we hope the political business cycle, where in the last quarter of the year we tend to spend beyond reasonable limits, and that will not recur. We've learned from our past mistakes and we'll stick to the course. So hopefully, if that happens, then the first quarter of 2025 will be a smooth year. There wouldn't be much turbulence.
The Institute of Statistical, Social and Economic Research also kicked against the scrap of betting tax.
We have to ensure that we get more value addition, high value services, not just small scale services, trading, etc. High value services in ICT and other service related areas. And finally, the issue about digitalization, trying to digitalize our revenue sources is very key. We want to reduce the human interface, we want to raise more revenue from property rates, we want to raise more revenue from the ports. If we cut out the human interface as much as possible, we want to raise more revenue from property taxes and other forms of taxes. And then we can then talk about scrapping e-levy, scrapping COVID-19 levy, but we do not subscribe to scrapping betting tax, because tax is also used to correct behavior. We don't want to turn our youth into betting, where betting becomes a business. Rather, let's tax that sector, use the money to promote jobs, create sustainable jobs that would engage the young people that we churn out from our institutions.
The institute, however, agreed to accessions to scrap the COVID and the electronic levy tax. James Eshen's report for Joy Business.
Now, the Minister of Finance, Dr. Mohammed Amin Adam, is urging businesses not to panic despite the current pressure on the Ghana cedi. The minister maintained the Bank of Ghana is currently in a strong position to effectively deal with the pressure.
The cedi has stabilized for some time now. Over the last 1 month or so, we've seen relative stability in the cedi. And we are determined to continue to stabilize the cedi. The worry by many people is that demand for forex will increase as we go closer to Christmas. And I can tell you that the Bank of Ghana has accumulated significant reserves to meet the demand. We also know that the IMF, after the board approval on the 2nd of December, will disburse $360 million to Ghana. We are working with the World Bank also to disburse another $300 million under the DPO series. And so in addition to what the bank has already accumulated in reserves, we're expecting these flows, forex flows, which certainly will help in stabilizing the cedi further into next year, early next year.
Now, the International Monetary Fund Managing Director, Kristalina Georgieva, has given the firm assurance that the fund is committed to helping stabilize Ghana's economy. The Managing Director gave this assurance in a meeting with the Bank of Ghana Governor, Dr. Ernest Addison, and the Minister of Finance, Dr. Mohammed Amin Adam, in Washington, D.C., USA. George Yaffe reports.
IMF Managing Director's comments are coming at a time that the IMF staff is also preparing to go to the board on December 2, 2024. Therefore, one is not sure how these comments would impact on the board meeting on Ghana. The Finance Minister has already indicated that they are confident that Ghana will pass the review, resulting in some $360 million being disbursed that would hit Bank of Ghana's account possibly in the first week of December 2024. The IMF Managing Director in the same meeting praised Ghana on how it has handled the domestic and the foreign debt exchange program in terms of the pace of progress and how Ghana moved to reach a deal with these international creditors. Madam Kristalina Georgieva also praised Ghana's economic management team in terms of progress made under the fund program, resulting in government reaching a staff-level agreement earlier this month, pending a board approval in December this year.
While the IMF says it is still worried about the election-related spending and how it could derail the fund's program going forward, Abbe Salasi is head of African Department at the IMF.
Has gone through a really wrenching period of macroeconomic instability, and decided to move forward with a comprehensive set of reforms. I think these reforms are beginning to bear fruit, and that's the growth numbers that we're seeing. And going forward, really, it's continuing to strike a healthy balance between the continued need to address all the development spending needs Ghana has with avoiding debt sustainability. So that requires, maintaining modest levels of fiscal deficits, going through an election cycle now, avoiding the pitfalls to which Ghana pitfalls Ghana has faced in election cycles in the past. These will all be critical to making sure that, going forward, Ghana can have a healthy macroeconomic situation.
Now, let's shift focus to the banking industry now, because Development Bank Ghana is now taking some aggressive measures to help improve lending and reduce the cost of borrowing to some critical sectors of the economy. The bank has now set up a subsidiary unit to specifically guarantee loans that banks will extend to sectors like agriculture and, of course, SMEs in the country. Chief Executive of the bank, Kwame Naduka, disclosed this to Joy Business on the sidelines of the IMF World Bank meetings in Washington, D.C.
The purpose of that is to provide risk participation. So that when the banks are taking risk in terms of supporting our local businesses, we're going to come in through Development Bank Ghana and support them up to 60, 70, and even sometimes 80% of that risk. And that's important because if you can mitigate that risk, it allows them to be able to lend more. And as they lend more and as we continue to support good practices, then we can scale up.
So this guarantee institution is more of going to absorb the risk associated with lending to certain sectors, and that could again reduce the cost, because I know that the risky nature of a sector is priced into that loan. And I know agri could be one of the sectors that could be benefiting from this if it materializes.
Oh, exactly. I mean, GERSO has been doing that for some years now. And Development Bank Ghana Guarantee will be doing that not just for agriculture, working with GERSO, but in manufacturing, in ICT, and all the areas that we mentioned. So we're just expanding that risk participation footprint. And we've got 50 million from the World Bank, 20 million from KFW, and with that 70 million, we're going to be able to do a lot of good. Yeah.
In the economics, you say all other things being equal, when are we hoping that it would take off? Because for a lot of players who are doing good business, a lot of sectors that are doing everything right, but their only hedgehole has been the risky nature. They'll be looking forward to this institution taking off in earnest.
Development Bank Ghana Guarantee will be fully operational early next year. We're looking at January for them to hit the road running, but it'll certainly be in Q1 next year.
Let's talk about sustainable financing. And I know that the green financiers out there might be worried a little bit. What is DBG doing to try and, again, influence financing to ensure that our funds will go into areas and institutions that are 100% committed to sustainable environmental principles when it comes to the operations? I mean, some will say that these caterpillars and champagnes that we are seeing, they don't fly from space to there. There might be a financial institution that it might be indirectly or unknowingly playing a role as well. Looking at the muzzle you hold in this space, what are you doing to ensure that our funding, or we will deal with institutions that promote 100% sustainable workings going forward?
Let's take a quick step back. And I don't know if any of you have been to a Galamsey field, where you'll see thousands of young men working, basically, as you quite rightly said, with practices that are destroying the environment and all that. And there's a perception that, the answer is to punish them. But do you think that any of them came in that morning to look for gold under really dangerous circumstances? Do you think they came in and their first priority was let's destroy the environment? No. They came in to earn a living. They came in to earn a living for themselves and their loved ones. So we have to remember that green financing is not just about choosing the select people or group of companies that are blessed enough to be able to do things properly, but to put in place alternatives and practices that allow people to be able to make a living and do it without destroying the environment.
Like George, we are having that great interaction with the managing director of DBG, Kwamna Duka there. A while longer within the banking space, because shareholders of Amantia Rural Bank in the Ashanti region are set to receive 20% returns on their investments as the bank profitability surged following government's conclusion of the domestic debt exchange program. For the past 3 years, the bank, despite accruing profits, was unable to pay dividend to its shareholders owing to the Bank of Ghana's directive in the implementation of the DDEP. But after making a significant stride in profits for 2023, Amantia Rural Bank is paying approximately 1.8 million cedis in dividend. Emmanuel Bright-Kweku was at the 39th AGM and has filed this report.
The Amantia Rural Bank is one of the few rural banks in the country approved by the Bank of Ghana to pay dividend to its stakeholders after making huge gains. A total dividend of 1,845,944 cedis, representing 5 pesos dividend per share, is expected to be disbursed to a total qualifying shares of over 36 million by November 4, 2024. For the 2023 financial year, the Bank of Ghana has requested banks with the capacity to pay dividend to present their financials for approval. Hamidu Abbas has been a shareholder of the bank for over 2 decades now. The shares, he believes, could turn the fortunes of his family after enjoying years of benefit from saving with the bank.
The last 2 years, NADC, me to shares a top up, me dividend me wo. Yankasa me dividend ni na me ni bida. Ni na bibia me the top a top shares account. Say enkanya no a me friends e bianka yaba AGM enka me ntimi to shares. But we feel say me gia no na me the top a.
Following the domestic debt exchange program that adversely hits the financial sector, the Amantia Bank managed to make a profit before tax of approximately 11.66 million cedis in 2023. The figure represents an increase of 90.04% compared to the same period the previous year, which recorded nearly 6.14 million cedis. Frederick Chekwache is the Chief Executive Officer of the bank.
Because we knew where we were coming from, because we were also hit by the DDP, so we needed to re-strategize and cut down our costs. And like as I did indicate, the lending to the SME unit was short-termed, and for that matter, we were able to turn the deposit and then obtain a lot of income. So it behoves on us to obtain the approval of the Bank of Ghana so that we could return some form of dividend to our shareholders.
Managing Director of the Apex Rural Bank, Alex Kwesi Ewa, highlights the effective measures adopted by the rural banking sector for a positive trajectory in the coming year.
It's going to help them meaningfully, and we believe that it's also a signal to confidence in the banks, so that many people will be attracted to invest more, so that they will have more capital, and that will ensure the strength, solvency, capital adequacy ratios will increase, and it's a testament of the strength of these financial institutions.
The bank is positive of a strong financial performance for the year 2024 as they work to generate more deposits. For Joy News, my name is Emmanuel Brant-Kweku.
This is still Business Live. We have more stories for you after this break. To Business Live, shareholders in the grains value chain want the new Grains Development Authority bill to focus more on value addition to boost the economic gains. Parliament is considering the passage of the bill for the establishment of a public institution that would regulate activities of the sector. Speaking at a consultative dialogue organized by the Parliamentary Network Africa, some grain processors advocated for the inclusion of measures that will see the country not only exported grains but processing them into finished goods. There is more in this report.
In 2022, Ghana announced plans to establish a Grains Development Authority with a shared vision of boosting productivity in the sector. The proposed public institution is to help deal with challenges in the sector, including annual food price fluctuations, ineffective and inefficient buffer stock system. This saw the fashioning of a bill for consideration to facilitate the development and regulation of the market for domestically produced grains and legumes, particularly maize and soybean. The Parliamentary Network Africa held a stakeholder dialogue to solicit views as Parliament Select Committee reviews the bill. Cynthia Afijujo is the Senior Programs Manager at the Parliamentary Network Africa.
As part of the processes for a bill to become law, I know that the bill goes into a consideration stage where the views of other stakeholders are taken into consideration. So this forms part of that process where we are gathering the views of all those who will be affected by the process, so to make sure that their views are actually factored in the bill. So we are coming together to make our inputs heard. Here we are hoping to put together a position paper and present that to the committee that is working on the bill.
Has there been any challenges so far? How have you...
The event brought together stakeholders along the grain sector value chain to deliberate on ways to improve production from the farm gates to the processing hubs. In its current state, the bill, when passed into law, would allow the president to be the sole individual to appoint a head of the authority pursuant to Article 70. But some stakeholders are in objection as they argue successive government and political leaders have failed to uplift Ghana's agricultural space. Yao Ifrifa is the executive secretary of the Soy Value Chain Association of Ghana.
We sincerely apologize for that poor quality of sound there. Now, many African countries rely on mineral royalties to support their economic development. However, due to weak governance frameworks, the extraction of these mineral resources often lead to devastating effects on the environment, and as is the case for galamsey or illegal mining, which has polluted many river bodies in Ghana. But with this Nature Lead project, the United Nations University Institute for Natural Resources in Africa is providing training to some government professionals and stakeholders on the effective management of natural resources. There is more in the following report.
My view showing the ravaging effects of illegal mining on the green cover of the world's leading exporter of gold. But Ghana is not the only African country grappling with the misgovernance of its extractive sector. According to the United Nations University Institute for Natural Resources in Africa, many African countries depend on rent from hydrocarbons and minerals to support their economy, bringing along with it complexities that adversely impact the climate. With its Nature Lead project, these professionals, drawn from across West Africa, are receiving training at Ghana's Foreign Service Institute in a bid to reverse this trend.
So the primary objective of Nature Lead is to furnish stakeholders with hands-on practical instructions that we expect to equip them with tangible resources and a deep understanding of the ways in which efficient natural resource management can facilitate Africa's progress and stir its transition strategies. What sets this course apart is its focus on practical skills and its emphasis on the positive potential of sustainable natural resource management within the African context.
This inaugural program demonstrates the ministry's contribution to tackling urgent global challenges and reflects our vision of creating a hub for knowledge exchange and collaboration.
Experts argue that over $1 trillion economy awaits Africa if it successfully transitions to clean energy to drive sustainable growth.
And in that sense, we can leapfrog technologies in a more effective way. Just to also mention that there's a 1.3 trillion investment opportunity in the Africa's energy sector. When we talk about these issues, we talk in terms of poverty, but there's a huge opportunity also that we can leverage in terms of how we can showcase our vast energy resources so that these become the transformational lever to catalyze industries, especially local industries.
After days of receiving training under the various modules of the Nature Lead project, these government professionals and stakeholders are expected to provide expertise in shaping the natural resources governance frameworks in their respective countries. Let's report for journalists.
The International Business Chamber has advised government to improve the economic conditions of the country to help businesses grow. The chamber is concerned that the current economic environment makes it difficult for the private sector to thrive. There is more in the following report.
The networking cocktail event for businesses between the Ghana-Belgium Business Club, the Ghana-Netherlands Business and Culture Council, as well as the Ghana-South African Business Chamber, highlighted the need for businesses to stay more focused and resilient in the current economic difficulties. The president of the Ghana-South African Business Chamber, Grant Weber, noted that businesses within the chamber should remain keen on creating a wide business reach.
It focuses us more. It ensures that we work harder for our members. This is really when we make a concerted effort to get our members as active as they can be through the various activities of the chamber. Especially when the economy is difficult, as it is. You need to work extra hard to get new contracts and new relationships. So events like this are good to break down barriers, work together with other business people in the community, and see how you can extend the reach of your business.
The South African High Commissioner to Ghana, Her Excellency Grace Mason, entreated small and medium enterprises to take advantage of the support and opportunities within the chamber to enable growth.
For the businesses, and especially the small, medium enterprises, that they should leverage the opportunity we are here to support. Our business chambers are here to support, and we are here to use the opportunity to leverage and to network. If you want to go far, you must go together. But if you want to go faster, then you go alone. So we are here to go further. That is why it's collaborating, the essence of bringing to our economies and doing this together with other business chambers as well within Ghana.
The chamber looks forward to more networking opportunities between businesses within Ghana and the international market.
I truly appreciate your time watching Business Life with me, Pius Kojo Baka. We have more stories for you when you log on to myjoyonline.com/business. ISE projects Ghana's 2024 growth rate to hit 4.5%, and we were quite heavy on that here on Business Life. Also on that portal, shutdown of Sonon Asogli plant, IES warns of Dumso. More stories for you when you log on to myjoyonline.com/business. Grateful serving you. Let's connect at 8 p.m. with Prime Business. See you. Bye.